Ladies and gentlemen, good day and welcome to Navneet Education Q4 FY22 earnings conference call hosted by Prabhudas Lilladher Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jinesh Joshi from Prabhudas Lilladher Private Limited. Thank you and over to you, sir.
Thanks, Diksha. On behalf of Prabhudas Lilladher, I welcome you all to the 4Q FY22 earnings call of Navneet Education Limited. We have with us the management represented by Mr. Sunil Gala, MD, Mr. Kalpesh Dedia, who is the CFO, and Mr. Rumi Mistry, Head Investor Relations. I would now like to hand over the call to the management for opening remarks. Thank you and over to you, sir.
Thank you, Jinesh. Hi, good morning to all of you. In fact, we have Mr. Sanjeev Shah also on this call with us to discuss further on EdTech initiatives. So let me straight away come on to the results. As you all know that individual quarters are actually not representative of a full year, and hence I will give you broad performance of quarter and for the year 21-22. So as you saw the results, Q4 revenue grew by 46%. And for the year, it grew by 32%. These are still not pre-pandemic numbers, but with better performance in Q4 overall. Trend in the current year, we are very hopeful of 22-23 and onwards being normal years. Of the above growth on standalone basis, publication business grew by 26%. Stationery domestic grew by 63% and stationery exports grew by 27%. And at an annual basis, EBIT margins of publication businesses are lower compared to FY20 since economies of scale have not been received yet in 21-22 with respect to publication business. Whereas stationery, domestic and exports have almost achieved the same EBIT margins as FY20. Instead of talking much on the Q4, now let's talk on what are we looking forward. First, I'll start with publication business, of course on standalone basis. And let me remind you that this is the most important part of our business. As you all know that company publishes supplementary books, which includes digests, question bank, workbooks. As you all also know that company is dominant market leader in the state of Maharashtra and Gujarat. And Maharashtra contributes around 55% of the revenue, whereas Gujarat contributes 45% of the revenue. The school in this segment typically have an annual fee of around 15,000 to 20,000 rupees and had not adopted online education effectively due to lack of resources, infrastructure with the school and children and lack of training. As you all know that Navneet's market share in this segment is quite substantial. So overall, going forward, we foresee that publication business will come back to normal and will grow here on. Also, let me tell you that paper prices are totally passed through and we will maintain same margins as previous periods, even though paper prices are on rise, or I should say were on rise. On Q4 in particular, all of you might have some question in terms of revenue. So Q4 22 compared to Q4 21 is more or less flat. But compared to Q4 20, which was a normal year, it is far better. This is mainly because many schools reopened in the month of February and started ordering. So we expect good numbers in first half of this year and expect this business to do much better than the past due to two reasons in particular that I should mention specifically here. One is during COVID, lots of the trend has been that students do use second-hand books, whereas during COVID, because 2 years have passed, there is very less availability of second-hand books, and therefore we believe fresh purchases will have to be made by the students, and therefore we will see some more volume growth than normal. And the most important, another reason I should mention here is National Education Policy 2020. As you all may know, in the past also, whenever there were curriculum changes, we had substantial growth in volumes, and similarly will be the case from 2024. What we get the news right now that respective state governments have started building new content, and that will be implemented from 2024 onwards. So 3 to 4 years thereafter, we will have continuous revision, and that will benefit all the publishers, including Navneet. So these were the two main reasons we believe not only 22-23, but the year thereafter also will have a good growth going forward. Simultaneously, let me talk about our CBSE initiative, which also you all know that we had acquired Indianica in 2015. It is a 100% subsidiary of the company. As you might have seen that this business has also turned around in Q4. Q4 results do reflect that. And just to remind you that CBSE book business is always in the last quarter of the year, which is the March quarter. Turnaround in this business was actually due in 2021 itself, but due to COVID, it got postponed. The turnaround mainly is due to rationalization of cost, focus on more appropriate titles or increase in number of titles. So we could achieve at first time, I should say that EBITDA of around 2 crore, of course very small number, but we first time in the life of Indianica, we achieved EBITDA positive, though there was a loss of around 6 crore due to depreciation and interest. So going forward, we now expect Indianica to become PAT positive from current year, 22-23. Now let me take you through the prospects of stationery business. Here also export of stationery is almost 2/3 of the stationery business and is largely to the US markets, and rest is domestic. Export grew by 25% or should in 21-22 and is likely to grow at 25% CAGR or beyond for over next 3 to 4 years, and should lead to expansion in stationery margins because exports margins are better than domestic stationery, and therefore at an overall stationery business we should see better margin improvements in stationery business as well. So to keeping this in mind, we are setting up a center for stationery exports with capex of around 100 crores over a period of 5 years. We did spend meager amount towards land acquisition, but going forward in 23 and 24, we'll be investing around 40 odd crore and balance will be spread over further 3 years. We also expect our domestic stationery to bounce back to pre-COVID levels, and as I said in the beginning, that signs are already there in Q4. Here I should specifically mention that paper prices are passed through in domestic business, but not in case of exports, because exports we take orders quite well in advance and then we have to service them. But thankfully, together with rupee depreciation and smart buying of paper, we are hopeful to maintain the margins in exports as well. Now let me take you through the digital business. All along we have been calling it eSense Learning Private Limited. Recently we changed its name to Navneet Future Tech Limited. So over last 1.5 to 2 years, company decided to make investments in EdTech with a long-term view to expand its horizon beyond traditional publication business of Maharashtra and Gujarat. This was to take advantage of changes in the industry which are opening new avenues beyond traditional publication segment. So company plans to leverage Navneet's content, brand, relationship, distribution, etc. in tech business and venture in core states as well as many other states in the country. So what have we done so far? How much amount have we spent? I'll speak on that now. So company invested in basically 2-3 different verticals. It invested both organically and inorganically. So till 31st March 22, company
Ladies and gentlemen, request you to please be connected. The line from Mr. Kara is disconnected. I'll connect him back to the call. So you may go ahead now.
Yeah, I'm sorry, my line got disconnected for a minute. So let me discuss again on our EdTech initiative. So in last 2 years or so, we decided to make investments in EdTech with a long-term view to expand its horizon beyond traditional publication business of Maharashtra and Gujarat. This was mainly to take advantage in the industry which are opening new avenues beyond traditional. So company plans to basically leverage Navneet's content, brand, relationship, distribution, not only in core states of Maharashtra and Gujarat, but also in the rest of the country. So let me take you through the future of the business as well as amounts spent till date. So company made an investment of around 30 odd crores in 3 companies, which I had discussed during my last investor call also. And since beginning till date, we have invested around 80 odd crores organically. And company in 23 alone, company expects to spend further 60 odd crore, assuming we do not make any other more investments. So we had explained our digital strategy in December quarter. Me and Sanjeev had discussed on the request of few investors. But let me take you through what have we done in last 1 quarter. We have already launched our flagship LMS product for CBSE schools, and initial response from schools are encouraging. Similarly, launched tutoring platform which is called VEMS, VEMS, which we acquired company GenNext, and initial trial runs have happened, and now we will go a little aggressively there. We will be also launching our early childhood learning platform, LibBridge, very soon. Other two investee companies being Galileo and Tinkerly are also doing well. However, I should at least place this on record that company is in very initial period of learning curve. We don't want to really set very high expectations till we are fully sure, as we are relatively new to this business. The company will be able to show or know benefits of its investments only sometime in 2024 and onwards. Beyond these EdTech investments, we did other investments which we believe are two very valuable investments. First being the school management services company, which is K12 Techno, that we have invested. So no doubt it is growing very well. We own around 27% equity post dilution on account of new investors coming in. It is just a number, but I should tell you that based on the last investment that company received, our stake was valued around 600 odd crores, whereas cumulative investment in that company we made were around 120 crore. Thankfully, this company has also ventured into several EdTech initiatives for its own school under management and also has started marketing the same to other schools. Overall growth potentials are very high in this opportunity. The other investment is into sports management company, SFA. Let me tell you, it is a sports tech company and mainly deals with the students, and therefore the investment. We had committed around 75 crore in this company, of which around 50% was invested in last year and balance will be invested in the current year. This was on business. On the current cash and debt, also I should tell you here that our current cash was around 19 crore and debt of 70 odd crore as of March 22. However, you all know that March quarter is the biggest as we build inventory for the forthcoming season for June quarter, and therefore we expect to become debt free by around August as earlier years. So overall net, let me tell you what is the investments for 2023 and dividend policy also. So overall, as I mentioned, that in our stationery business we'll end up spending around 40 crore. It could be mostly in 23, but balance in 24. So, but overall in 23, around 40 odd crore will be invested in stationery business. In Navneet Future Tech, around 60 odd crore, and in sports business, which I just mentioned, that 50% of investment in SFA is balance around 37.5 crore. So these are the investment plans for 2023. And on dividend policy, it will depend on the overall need of funds in the company and the growth that we see in future. So now, having said this, I should also mention that we are highly excited by our growth prospects over next 3 to 5 years in our core traditional business of publication and stationery, as well as we are very hopeful with the kind of investments and the organic opportunities that we have identified in EdTech. So overall, we are very excited. So these were my opening remarks, and now I request questions for the quarter, for the year, or for the future. And I'll try, me and Sanjeev will try answering all of them. Thank you.
Thank you. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Anyone who wishes to ask a question may press star and one at this time. We'll wait for a moment while the question queue assembles. We take the first question from the line of Prakash Kapadia from Anivet Portfolio Managers. Please go ahead.
Yeah, thanks for taking my question. Couple of questions from my end. If I look at the stationery business, I think we had peak sales of around 7.69 billion in FY19, and this year we ended at 6.8 billion. So, given the growth in exports, should we expect FY19 sales, peak sales to cross this year? And what kind of a margin trajectory can we look at in the stationery business? Because we're almost there at peak margins at 16.5% EBIT margins. So, how much can they improve from here on? That's on the stationery side. Hello.
Yeah, Prakash, go ahead.
Yeah. So that was on the stationery side. If I look at the publication segment, our peak sales then, I think in 19 were 7.7 billion, and today we are at 4.2 billion. So is it fair to expect we'll cross that peak sales of around 7.7 billion, say next year in FY24? And lastly, on K12, I think the valuation is around 22 billion as per the latest fundraise. So, any direction or plan for monetization of our balance stake? Do we remain strategic investors? Do we want to part trim? What's the exit plan there? So those were three of my questions, Sunil. If you could address them, that would be very helpful.
Sure, Prakash. Yeah. So on stationery business, basically question was, will we be able to improve margins over 1920? So as I said in my opening remarks, first of all on growth, we are very sure to cross the number of 1920 in the current year, mainly on account of exports of stationery because opportunities are quite large. As I mentioned in my opening remarks, that because exports stationery business grows faster than domestic, but obviously the domestic, rather overall stationery margins has to improve because exports of stationery business enjoys better margin. The challenge could be that, as I mentioned, that we do pre-book the order a year in advance, whereas the raw material volatility is always a challenge for us. And we have, of course, tried smartly controlling the paper prices by either buying that little bit in advance or contracting with the paper mills for a longer period. So that way we believe it will improve. It will rather remain at least the same for 20 to 23. But as business of exports grow, we are very sure that the overall stationery margins should improve. On your second question to publication business, yes, we are very sure that we will cross 1920 numbers. This is on account of the two reasons that I gave you. Of course, NEP will get reflected from 23-24, but because 2 years actually students had not worked, and therefore replacement of second-hand book market is quite possible. The trend today, we may not be able to show same performance as 1920 in Q1, but when we talk of full half year, then we are very sure that publication business should cross 1920 numbers. And on monetization of K-12, the way company is progressing still now and is likely to progress for next couple of years, I believe there is more juice left in that investment. So maybe at the right time, we may monetize, but nothing decided as of now.
Okay. So essentially, you're saying publication on an annual basis should cross the pre-COVID number of around 7.7 billion in FY23 only.
Yes, please.
Okay. And for going forward, NEP and the syllabus change should drive growth in the next 3 to 4 years on the publication.
That's right, Prakash.
Wonderful. Thank you. All the best. I'll join back if I have more questions. Thank you so much.
Sure.
Thank you. We take the next question from the line of Mr. Anand Shirgaonkar from Newport Capital. Please go ahead.
Hello, can you hear me?
Go ahead.
Please.
Yeah, good. Thank you. Thank you for the opportunity. I'll just continue with the previous question. For the stationery business, when you said that the growth or the number for F23 will surpass the number for F20, you mentioned that it will mainly be because of exports growing at a faster rate. But if you look at the domestic stationery for the year which has just ended and compare it, even that is down by 23% versus say F20. So wouldn't it be fair to say that even domestic stationery should pick up and cross the F20 number? So I don't know whether exports is responsible for the stationery crossing F20, or individually domestic will also cross the domestic of F20. That is the first question. I'll ask the next question after you answer.
Yeah, Anand. What I said that exports of stationery will grow faster than domestic. I agree that we were down by 23% compared to 1920 numbers in domestic stationery. I'm very confident that we will cross 1920 number also. But the pace of exports growing will be faster than domestic. That's what I meant.
Wonderful.
As a percentage.
Wonderful. That is very clear. Thank you. So the second question is, if you go back to, I think the one conference call or two conference calls ago, you had mentioned that the digital aspiration would be such that towards the end of the year, maybe December of this year, you would want to approach some funds and try to see if you can get some investments as having some kind of a value in unlocking on the digital side as well as setting a benchmark. But since that conference call, things have changed a lot globally. Be it on the overall technology front in the US, on NASDAQ or FANG, and partly reflecting in the private equity investments on the technology side in India as well. So do you think that original plan could have shaken a bit, or how would you look at this situation that has changed now vis-a-vis what you mentioned, saying December we should expect some kind of a news flow on this?
Yeah, Sanjeev, do you mind answering this? Is Sanjeev there?
Give me a moment, sir.
Sanjeev Shah.
Mr. Sanjeev, you may go ahead.
Yeah. Hi. So, can you hear me now?
Yes, we can.
Okay, great. So I was saying that the international and the domestic market volatility is not driven specifically by any sector and definitely not education or edtech. So that is one response to that point. More importantly, for us at Navneet EdTech, we were not looking at accessing the markets, the public markets, at least for quite some time. It is not even a discussion at this stage internally. We are very focused on firstly getting our business planning exercise completed in the next 1 or 2 months. We want to make sure that we are very carefully focused on launching the products in a test mode. We want to make sure that our customers are engaged with the product. We take their feedback before we go live with big bang marketing, and we don't want to get in front of the customer in a half-prepared manner because there is a large franchise of Navneet also out here. So at this point of time, we are not looking at timing the markets in any case with any linkages with public markets. We have no such aspiration to do so for the next 2-3 months. Our focus is singularly on getting the technology and the product platforms developed now. And for the immediate future, at least, we are very confident that we will be able to establish enough confidence in the trial of the product launch before we actually get into a full-fledged public launch, which is when the funding will actually go up because of the incremental marketing costs.
Yeah, wonderful. Thank you so much.
Thank you. We take the next question from the line of Giriraj Daga from KM Visaria Family Trust. Please go ahead.
Hello, team. A couple of questions from my side. So
Sure.
first, like already discussed a bit. So what I want to understand is that, like obviously we did about 710 crore revenue in the standalone publication business. What my understanding is that even if let's say we achieve the similar kind of volume, we will be about 750, 780 crore given the inflation where we are right now.
Yeah.
So this is the right assumption, right? Matlab that business
Yes.
volume will remain same. Okay.
Yeah,
Second is that in the India Nika side, I'll take separately a publication. India Nika, what should be the growth rate should you assume for next 3 to 5 years in terms of CAGR since the base is low? Should it be 20, 25, 30% kind of a growth number?
Yeah. So for India Nika, we assume conservatively 15% revenue growth. One important thing that I should have mentioned or we all should know is overall the importance of using or implementing CBSE curriculum is rising in the country very, very fast. So not only CBSE affiliated schools, but there are so many CBSE pattern schools converting from SSE every year in every state of the country. And therefore, since number of schools are rising rapidly, the growth potential for CBSE publications, textbooks also is very, very high. Navneet has additional advantage that one side it has excellent textbooks to sell or get them recommended in the school. Simultaneously, on the similar lines, we have now digital offering also, maybe through a subsidiary. So we will have dual advantage to the digital arm because it has books from the parent company, and parent company will have an advantage. Parent, what I mean is the subsidiary, India Nika will have an advantage that it will be able to recommend more and more books together with the digital offering. So that way, as Navneet Group, we have additional advantage, and therefore we believe India Nika also should grow around minimum 15% CAGR over next couple of years.
Okay. So the number point is that this minimum 15% looks very small given the base where we are right now. So
No, that I fully agree. See, we have to see the competition in the market as well as reach is not that easy because it is spread across the country. And with the experience of last 5-6 years, we don't want to really increase our expenditure way beyond it can be managed. And therefore, conservatively, I'm saying we should grow at 15%.
Okay. Just a follow-up here, last thing, like obviously you had a own share of learning post you acquired Indianica. Will management be looking for any inorganic with this side, or there's complete no for CBSC publication?
No more inorganic opportunity that we will see. Now we have enough experience, understanding of the market. Therefore, be it publication coupled with digital offering from the other group company, I think we have enough opportunity to grow, but no more inorganic opportunity now.
Okay. My second question is on the public stationery side. Just a follow-up here. You mentioned 25% CAGR for next 3-4 years on the export side of it.
Yes.
Should it be like FY23 should also be reasonably good year, considering that US is going through the slowdown? So,
fortunately, these are very small items from a consumption point of view of an individual. Therefore, we are very confident. There are so many other reasons. See, even if their consumption goes down a bit, even on the smaller items, but from where were they exporting earlier? That is getting shifted to country like India, and therefore enough opportunity to us, and therefore our confidence of growing 25% CAGR.
Okay. My third question is on the, like in the initial remark you mentioned about the dividend, and we will see dividend depending on the growth capex. When I look at the earlier numbers, we used to 300 crore plus kind of EBITDA in FY19, FY20. Given that we are again talking of similar and better revenue from there, should it be fair assumption that we should be similar kind of but better EBITDA? So is there why there's second thought that there should be dividend rethinking? Because we will be again doing 300 plus EBITDA, and this additional investment what we are talking about of 140 crore should be fairly without raising debt also.
I fully agree. Only thing, in the past, we were not in an investment mode the way we are today, and therefore we wouldn't like to bring pressure on the company, and therefore I just made the general remark that looking at various opportunities and investments made by the group, not only at standalone basis, we'll consider the dividend, but obvious. We will continue with our policy of distributing 25% or above of the EBITDA of the PAT number.
Okay. Last from my side, and if you're open to that, can you give me the revenue EBITDA number of our K12 company and SFA for FY22?
Do we have Kalpesh? Can you come in, please, as far as K12?
Yeah, 1 second. So revenue is about 165 crore.
Okay.
And EBITDA of about 2 crore negative.
At a company level, Kalpesh?
At a company level.
Okay.
Okay. And how about SFA?
I think SFA number we may not have considered right now. Have we considered, Kalpesh?
No, we have not considered.
Because investment has not finalized, means not completed. We may not have considered. But FY22 would be very meager loss. And FY23 onwards, it should do very well.
Okay. Sure. Thanks from my side and all the best.
Thank you.
Thank you. Before we take the next question, we would like to request the participants to restrict their questions to 2 per participant. We take the next question from the line of Samarth Singh from TPF Capital. Please go ahead.
Thank you for the opportunity. So on just for clarification, I wanted, you mentioned on the standalone publication business that Q1 of this year will not be as good as Q1 1920. Could I just understand why? I mean, the schools should be all open by now, so it should be similar revenues at least, right? Similar profitability.
Yeah. So do I answer that first before you ask me the next question?
Yes, please.
Yeah. What has happened that we all read in the papers that schools have opened, which is a case also, but there is big issue right now in the regional medium schools. Regional medium schools, what had happened that parents had shifted those students to government-run schools to save on fees and continue their academic growth. Many of them have not yet shifted back, thinking that something may happen again. And we are very sure that when it comes June, when the next academic year starts and actual school starts, that time they will immediately rush back to the schools that they were in already. So because of that, we are not seeing much orders right now from regional medium schools. And therefore, I said that Q1, we may not see the same growth, same numbers as 1920. But first half, we are very confident because finally students have to learn. And therefore, they will have to go back to their original schools.
Sir, and what percentage of 1920, revenues in Q1 were from regional medium schools? Would you have that number?
So it should be around 37-38%.
So 37-38% of our Q1 revenues pre-COVID were from regional medium schools.
That's right. But I'm not saying 100% will get shifted to second quarter. Partly it has started, but unfortunately what happens that the one of our business, means the workbook category, which are recommended by the schools and bought by the finally schools, that has not happened. The guide category sales have already started, but
right.
Workbook category has not started. So part of the regional medium sales will get shifted to Q2.
Right. And that is depending on students coming back to the regional medium schools as opposed to staying in government schools.
Yeah, in government schools, they had just enrolled. No one were visiting them.
Right.
Yeah, and I somehow logically also do not see that they can stop learning.
Right. Okay. Great. And then my second question was on Indianica. In your opening comments, you mentioned that it was Q4 was also still not similar to a pre-pandemic year. But essentially the schools had opened and the buying happens in Q4 starting for students that will start in studying in April, right? So shouldn't Indianica at least reflect Q4 reflect a normal year for Indianica?
Yeah, as I recollect in my opening remarks, I did mention that Q4 was quite excellent, and because of Q4 at the year level, we turned EBITDA positive. Overall, the number for Indianica at an annual basis looks little lower than our expectation also, because what had happened last year during March also many schools started, opened, ordered, but again schools stopped. So we had little higher returns, and therefore net of returns, the revenue for the year we saw dip. But from Q4 performance, we are very confident that going forward, Indianica will grow from here.
But the Q4 would reflect 90% of the yearly revenues for Indianica?
In normal case, yes. 85 to 90% would be in Q4.
Okay. And the competitive scenario for Indianica has not changed. It's similar to what it was previously.
So this year little being abnormal year because many publishers were able to procure their raw material at the price that they wanted, or even there was unavailability. Thankfully, because of Navneet's relationship with paper mills over so many years with excellent